Okay, hi there. In this video, we're going to consider just 4 advantages and 4 disadvantages when businesses engage in price discrimination. And we'll also revise some evaluation approaches that might be useful in exams when discussing the impact of price discrimination on consumers. This strategy of price discrimination takes us away from the standard assumption that there is a single profit-maximising price for the same good or service. Indeed, the reality is that in most markets there are many prices that might be charged at a point in time. It's useful to know something about the different types of price discrimination. With first degree, businesses charge different prices for each individual unit bought. In other words, you're charging each person what their own willingness to pay is. And in that situation, every consumer is charged a different price. But by the way, that means that all the consumer surplus is essentially captured. Normally, though, the market is split into at least 2 different sub-markets, and second discrimination is varying price by the quantity sold. For example, a bulk purchase discount at a wholesaler, or also by the time of purchase. There could be a peak time price and an off-peak price. Third degree, most common, is where you charge different prices to different groups of consumers. You segment the market according to the coefficient of elasticity of demand or some other metric, income levels, age, sex, and so on. So different types. Naturally, in this kind of diagram, question, you'll need to use an analysis diagram. Some exam boards like you to show the combined market. If we have 2 markets here, A and B, one on the left-hand side with a fairly elastic demand, one on the right with a more inelastic demand. Sometimes the exam board wants a third diagram showing the combined markets. I won't show you this in this video, but be aware of that. On the left-hand side here, assuming the marginal cost of supply is the same to each, this group is charged P1. On the right-hand side, more inelastic demand, the profit maximising price is P2 because they have a higher willingness and ability to pay for the product. Exam boards like you to develop your diagrams, so if you have a chance, if you can draw these quickly and well, maybe include areas of consumer surplus and producer surplus to get those higher analysis marks. Okay, so the rest of the answer is going to be diagram free because I want to focus on the advantages and potential disadvantages of price discrimination. So let's move on to those. Let me take you through 4 separate points which could be used to justify price discrimination. The first point is that businesses that charge differential prices might well end up making better use of their spare capacity. That could actually lead to less wasted products and less unsold stock. So you can make a case for saying that at times there are good environmental benefits from this kind of strategy. For example, road pricing helps to reduce excess demand on tolls and bridges and motorways at peak times. Second point is that price discrimination can help to generate much needed cash flow for businesses, particularly small businesses, which can ensure they survive during a recession or during tough economic times. Restaurants and other businesses, they need to engage in this kind of strategy to generate cash because most businesses fail when they run out of cash. A third argument or third advantage in favour of discriminatory pricing is that it can often help fund what's called cross-subsidy. So some groups may pay a premium price, a high price for a particular product, but that then allows the supplier perhaps to charge a lower price for another group. Maybe a doctor charges different prices for different patients. A pharmaceutical company charges a higher price for the same drug in a rich country, an advanced nation, and then can charge a lower price for the same drug in an emerging or less developed country. The benefit of that is that consumers may be able to afford a product that they couldn't previously afford. So a special discount to certain groups could bring those consumers into the market. My fourth point is that price discrimination normally does lead to higher revenues and higher profits. Providing the extra units of a good or service can be sold for a price above the marginal cost of supply, then price discrimination is an effective way to increase total revenue and increase total profit. Well, those profits can then be used potentially to finance research and development, which could then lead to increased dynamic efficiency, and also can lead to important social benefits. For example, new drugs come onto the market. So, environmental issues, cash flow, cross-subsidy, R&D, innovation. 4, I think, quite distinct but important potential advantages of price discrimination. But of course, we also need to think about potential disadvantages. So here are 4 points on the counter side. First argument is that price discrimination basically allows producers to make more supernormal profit. It operates in their interests mainly, and they're extracting consumer surplus and turning it into extra profit. So it's mainly in the interest of producers. A linked point, a second point, price discrimination can be used as a pricing tactic to effectively reduce competition and reinforce the market dominance of existing firms who can then make bigger monopoly profits in the long term. Third point is that it can lead to the manipulation of groups with a price inelastic demand. A lot of students assume that the inelastic demand means that this is a consumer on a low income. It doesn't necessarily have to be the case. It could be a family that has to pay for a certain product, and that if you charge a high price, they're not necessarily on a high income, but they get squeezed. Their incomes in real terms go down. And linked to that, but I think a separate point, is that in some cases price discrimination can be perceived as being unfair or inequitable to certain groups. A good example of this is gender pricing, or the so-called pink tax debate. The argument is that firms charging different prices to different groups are effectively taxing one group over another. Here's an example, just actually from a few days ago, where a consumer, Sarah, had found out that Urban Outfitters was selling the same Kappa belt, a Kappa D-ring belt, for £22 in the female section, but £20 in the men's section. Exactly the same product. And she wanted to ask Urban Outfitters, why is the same product more expensive in the women's section? This is an example of sexist pricing. Just a couple of years ago, 2017, there was a furore, a controversy about gender pricing, that female razors were more expensive than men's razors for what was essentially the same product. And Tesco eventually announced they were going to cut the price of their women's disposable razors to match those of a similar product for men. And there's been a whole series of issues to do with this kind of stuff over the years. Perceptions of fairness, perceptions of equity are important in this debate. A lovely discussion on Twitter recently about the famous example of Coca-Cola, where the CEO hinted that they were going to sell chilled Coca-Cola from vending machines at higher prices when the weather was hot. This triggered a whole debate about fairness and equity. Eventually Coca-Cola had to backtrack, but it does raise interesting questions about whether this is fair or not. You can make a case for saying, for example, at peak times, that you have to refill the vending machines more often, or you have to install new machinery, in which case the costs are higher. But these are well worth bearing in mind as you follow the debate. Now, some evaluation points. So we've looked at some advantages and some disadvantages. Here's just one or two hints about how to evaluate the arguments. First point I want to make is that price discrimination in theory assumes the same marginal cost of supply, but in practice, in many situations, that's not the case. So, peak services on trains, for example, you often have to add an extra carriage or pay overtime to your workers. Oftentimes at peak times the marginal cost is higher, and part of that is reflected in the price. The impact or the consequences of price discrimination depends again in part on how the profit is used. Does that money get funded for research and development, or does the extra profit go into executive pay packets? Another third point here is that some buyers ultimately have to pay more, have to pay a higher price to cover development costs. Otherwise, if the firm can't cover their R&D costs, often useful products might never make it to market. And then there's this big question again of fairness. Is a fair price only ever a fixed one? This really does depend on our own perceptions of fairness, and it's always good to talk in an essay about the need to make value judgments at some point in time. Here are some recent contextual examples. The idea of loyalty penalties, for example. The FCA is investigating the extent to which people are more loyal to a product. Car insurance, video gaming, for example, actually end up paying more for the product than new users. How fair do you think Uber's surge pricing model is, where at peak times they lift the price by a factor of between 1.5 and 2, designed to get more drivers to hit the roads, but how fair is that? And a really controversial one from about 5 or 6 years ago, where Samoa Airlines decided they were going to start charging fares based on passengers' weight, marginal cost argument. This caused a lot of discussion at the time. How soon will it be before lots of airlines decide to start charging based in part on the weight of the passenger? That does raise interesting issues. Don't forget the analysis diagrams, very important and crucial when answering these questions. But I think the key to this topic is to have lots of good examples to mind, but crucially to have just 3 or 4 arguments for and 3 or 4 arguments against. And hopefully this video has been useful in giving you some of those examples. Okay, thank you very much indeed.